UK only had regulations around this particular sector come in last year, even though peer-to-peer lending has been going on for about 10 years now. So in UAE, just to back up slightly, Beehive in particular is regulated by the MCC, where it's based. There are no specific peer-to-peer lending regulations in place at the moment. The central bank does not have oversight of the company. The company itself does not actually lend monies or hold monies. It works with other institutions that serve as a fiduciary for the monies that are lent on the platform. So the company itself is more of a facilitator. And from that perspective, central bank oversight may not be appropriate. In other parts of the world, the UK and the US, where the program is more advanced, you see different methods. In the US, it's kind of split up state by state. In the UK, being a unitary system, there's one set of regulations, and the FCA oversees all peer-to-peer lenders. In Canada, where I'm originally from, there's a very clear, sophisticated investor exemption in place. So you have to meet certain thresholds in terms of your assets in order to be able to lend, which is quite restrictive. So for here right now, Beehive is following the UK model, and they're working with best practices that have been developed in the UK over the past decade in this sector, and are following that very closely with a view to influencing the sector here in a way that it develops.
I mean, if in some of the other markets, I think you're correct in saying peer-to-peer lending came first and regulations came second. It's obviously going to be the case here. If it was going to be regulated here in the UAE, what kind of model would you think it would follow?
Well, it's a very good point, and as we are in this tech disruption era, the Airbnbs and Uber of the world, I think peer-to-peer follows that quite closely. These businesses are developed quickly, they're way ahead of government, and then government slowly tries to figure out what to do and wrap some parameters around that. It's not so much an issue for companies that are working with best practices and have a team of members on board that are professionals. I think what you have to look out for is the charlatans of the group that would try to enter the space and make a quick buck. Here, and this is not we can get some of the founders up here, and Rick can certainly attest to this is not an easy platform to put together. For anyone who's been on the website, it's amazingly impressive. And as Dave mentioned, I'm also an investor, so I've seen the back end as well. That allows me to invest in companies such as Danny's. And it is a lot of work, and it's also a lot of money to put together. So I think the barriers to entry are quite high now. But this is something that I think has the central bank's attention, for example. And to Rick's earlier point, given the massive gap in SME funding, we're hoping that they remain happy with it, and that eventually there will be some regulations, no doubt, that come into place. But hopefully it follows more the UK or to a lesser extent the US model to allow this alternative source of finance to continue doing great things for the market.
Rick, do you want to add any comments from a Beehive side? Were you prepared for this in terms of the absence of the regulations?
Well, I just want to build on what Patrick's just said. I mean, this model has been 15, 18 months in discussion with the DMCC in terms of setup and structure. So that was a very full review of the business model strategy and how we would structure it. And it was always the intention, I mean, in areas like this where there is vague regulation or maybe limited regulation, you have to set up as robustly as you can. And we've set up Beehive under the FCA type structures that operate out of the UK. So, in terms of protecting investors' money, I think we've got a very watertight setup, which is effectively client accounts with a local bank here, administered by a third-party fund administrator based in the DIFC. In terms of controls over investor money, which is the main point, I think, in terms of trying to protect people's interests, we have set up a very robust system. Why DMCC? Well, the DMCC won, I think, the global award for the best free zone for SMEs in the world. It's got 8,000 SMEs in it, or maybe more than that now. It seemed a logical place for Beehive to locate. But I'd like to stress that this wasn't something that we dreamt up in 10 minutes and went to the MCC to open. This is 18 months of work that has gone into this to make sure that everything is as nailed down as we can. Because at the end of the day, for us, it's all about reputation risk. And if our reputation doesn't last more than 6 months for a number of reasons, credit being one, perhaps, or whatever, then obviously we don't have a business model. So we've been very, very precise at, as I said, nailing this down as hard as we can.
Thank you. Moving back to Danny again, I mean, so you pointed out the benefits. Do you see any disadvantages for SMEs, entrepreneurs using this rather public platform? It could be the information that's on the platform might be available to some of your clients and might prove to be an impediment to you in the way you do your business.
Well, there are pros and cons to every source of funding, but to be honest, people will always have an opinion about how you make or don't make your money. So I have the privilege of having reliable partners and advisors whom I rely on for sound advice, and so they're privy to the information and the inner mechanics of our company. So the rest of the opinions are not really irrelevant at this stage. To me, as a business owner, my priority is to make sure that we have a healthy cash flow. I mean, even if that means having to wear a tutu and pole dancing, I'll do it. Doesn't matter. Don't take me too literally on that. I'm just.
Did we type that?
You get the idea, right? So no, that's what's important to me, and Beehive fills that gap. We have on the entrepreneur side, we have a gap called the Valley of Death, which is essentially the middle ground between seed funding and raising capital from venture caps. So that's a very, very critical gap, and that's why they call it the Valley of Death, because about 80% of startups disappear. And that's where we feel that Beehive was able to secure us quick access to capital and give us more breathing space while we raise more money, more long-term investment from venture capitalists.
Moving back to Rick again, what are the key items that you're looking at that your credit assessor when you're selecting companies to go onto the platform?
Yeah, I think it's prudent to point out that this is not a lender this is not subprime lending. This is we want companies to come to Beehive as a lender of first resort. So coming to us before they go to the banks, perhaps to achieve, as I said, a lower cost of financing and a more efficient time to market. I just want to say, in my time in banking here particularly, but also in other parts of the world, I've come across so many times where we've had existing customers of the bank at the SME level who've come to us for small increases in facilities, and that takes 3 or 4 months sometimes to actually come to fruition. Now, banks are not set up to really churn this stuff through. So I think from that point of view, as I said, it's a lender of first resort to companies that come to Beehive rather than last resort. As I said, we are banking creditworthy companies, or we're putting creditworthy companies onto the platform. So the criteria, for example, is companies that have a turnover of 2.5 million dirhams and above, who have been in existence for 2 to 3 years, who have a positive track record, who have zero credit default scenarios, etc. So it's a very precise. It is not financing a startup from ground zero. It's financing established, creditworthy companies. So from that point of view, that's what we look to. We do a very rigorous credit process to look at the creditworthiness of these companies before we put them on the platform. We think the turnaround time that we can offer, if the company concerned provides all the documentation that we want, very quickly we can turn that around within a week to either say yes or no, come onto the platform. When the company comes onto the platform, they have a 2-week period of auction where they can come on day one, fill their loan immediately, and then the company can decide whether they want to take that money on day one or leave it on the platform for 2 weeks to see how it prices down. So again, it's a choice for SMEs of when do you take your money if you get on the platform. But the credit process is very, very thorough. We use over 150 data points. It's really focusing on the ability to repay, its cash flow, it's that ability to repay, obviously from a quantitative perspective. But it's also a lot of qualitative stuff that we're putting into the model, like the willingness to repay. What ties does a SME company have in the UAE? We all know this is a very expatriate-orientated community. So you need to make sure that you get those credit assessment points sorted, and as we go forward, obviously the model will be fine-tuned. But as I said before, for us it's about reputation. We have to put credit-worthy companies onto the platform to ensure that we get more investment coming in from investors and more companies coming onto the platform. So it is very important to get the credit element absolutely right.
What percentage are you rejecting at the moment?
Yeah, I mean, at the moment, we've done a total of 13 companies are on the platform, about $1 million lent. We probably rejected 90% of applicants who've come to Beehive to go onto the platform. So as I said, this is a very robust, from our point of view, it has to be a robust mechanism to enable investors to get returns. At the moment, the average cost of borrowing for companies on the website is about 13.5%. So therefore, the average return to investors is 13.5%. Right? So there are no NPLs, no non-performing loans. Obviously, this is early days. That's why it's very important to get that credit process as robustly structured as we can.
You mentioned non-performing loans. Patrick, what are the enforcement rules here in the UAE, given that these loans are all unsecured?
It's a very good question, and I do not think it's dissimilar to what your average bank has to do when they're lending money. Things like a bankruptcy and insolvency law don't exist here yet in any real form or enforceable form. So what Beehive does is similar to what banks do. They take post-dated checks, they take them for the monthly amounts that are paid back, they take a total facility check, they take guarantees from the shareholders of the company, either personal or corporate guarantees. They do pretty much everything you possibly can do in the regulatory environment here. And an important point to make with my investor hat, I would say, is that just to clarify, when the repayment mechanism of the platform, it's not a bullet payment at the end of a given tenor. So if it's a 12-month loan and you're an investor on there, you don't get 15% after 12 months. The feedback loop is quite tight. So you're getting the loan amortized, and you're getting a return 30 days after the loan is secured, and then every 30 days thereafter until the tenor comes to an end. So from an investor perspective, I think that also provides comfort, because you're seeing every 30 days that both principal's being paid down and you're getting paid your fees.
Just going back to your earlier point about rejection, Rick, what were the most common reasons for the rejection at 90% rejection rate?
I think obviously a lot of the rejection is in terms of whether it's credit history. When you do your full checks on the company, it's the return checks in the past, etc., etc. Maybe not quite fulfilling the requirements that Beehive have set in terms of parameters of companies coming to the platform initially. It's the usual sort of looking at the ability to repay, and if we don't think that they've got the ability to repay or to take on an extra debt, how much leverage they've currently got on the on their borrowings, on their balance sheet. Maybe they're overbanked. So there are a number of reasons why companies would get or not get on the platform, and generally the sort of the usual bank reasons of basically we didn't think they had the ability to or the capacity to repay the debt.
Moving on to the investors, what KYC is Beehive doing on the investors, and how rigorous is that process?
Yeah, it's very rigorous. Again, it comes down to structuring it as much as we can under the, as I said, the FCA guidelines out of the UK. So an investor comes onto the platform or approaches the platform, we will do KYC and AML checks